Hi, good evening. Hi, good afternoon. Hi. Okay, first of all, need to thank SC for giving me a chance to share with you. My name is Wiko Hua from MR Consulting. Today, I'll share with you on global and Malaysia stock market outlook. Okay. Today, I'll talk about the two main areas, global and Malaysia stock market outlook. So I believe we are quite excited. Okay, want to know what's going to happen to the Malaysia and the global stock market. So now, first thing, today I'll share with you on the tapering, global and Malaysia. Okay, so tapering a lot of times now this is actually the key issue when we're going to have the Fed will taper and basically means the slowdown on the asset purchase. So of course, will give impact to the world economy, the world liquidity as well. Okay, now, in order to answer these questions, okay, I think everyone, the whole world today is actually focusing on one thing, okay, beside all some political or some economic developments, relationship between countries, okay, but I think every country in the world actually affected by the COVID-19. So the vaccines and the progress, okay, of the vaccination actually do have big impact to the world economy. Okay, now, I believe you may have watched this movie before. Okay, now I would like to share with you one thing is actually we are at the beginning of the end game of COVID-19. Talk about the beginning of the end game. Okay, if you still remember the song, no? Okay, the final moment, no? Okay, so when all the heroes get together, no, to fight the COVID. So I'll share with you why we at the beginning of the end game of COVID-19. Okay, I think not many speakers actually mentioned this in public. Okay, I think I'm one of the first few to share with you that we may see the end of the COVID-19 already. Okay, now look at the daily new cases. Okay, the global daily new cases. Hey, you notice that it's actually on the way down. Okay, start trending down. Okay, now, and the second, and notice that actually you have three peak. Okay, and then the third one is actually lower than the second one. Okay, in a lot of some of you actually may have some technical analysis knowledge. It may be appear to be like head and shoulder patterns. Okay, you notice that the second the right shoulder is actually lower than the peak. Okay, the head here. Now, this is actually the global COVID-19. Okay, now if you remember Spanish flu, for those actually have been following my public seminars, okay, we noticed that I mentioned I like to use these slides. I mentioned to you that this COVID-19, the pattern is actually quite similar to the Spanish flu in 1918 to 1920. Okay, and during that time you have three waves. Okay, three waves. So right now we also have three waves. Okay, now. So some of you may ask, we are actually definitely will see the end of the COVID-19 based on the current information, based on the current trend. It appears to be in this manner. Okay, the latest numbers. Okay, I'll show to you right now. You see getting more and more articles actually start to mention these things. Now, look at the global daily death numbers. The numbers actually coming down. So it's implying that they actually the numbers getting lower and lower, So it's like a channel down. Okay, patterns actually channel down, getting lower and lower. Okay, now 4 days ago, 3-4 days ago, okay, the New York Times, okay, by David Johart, he said that COVID in retreat. okay, he noticed that actually the US, the COVID cases actually on the way down. Okay, now I'll show you the US COVID cases. Now, because the key number here, okay, basically is due to the Delta, and actually, US is the main one suffering from the Delta. Okay, and yesterday there's one article saying that if this virus actually, the dominant is actually Delta, quite high chances that you're not going to see any other mutation really. Okay, and this Delta will be the dominant one from now until will live together with us. Okay, now beside this event, that New York Times actually mentioned this, that COVID in retreat, and our health minister Kyrie, he said that we're going to order this the recent antiviral, okay, on the COVID-19 pills. Okay, we're going to order 150,000. Okay, if you ask me, okay, quite successful, able to reduce the seriousness by 50%. That means reduced by 14% to 7%. Okay, so it's quite significant. Okay, of course, quite expensive. One dose actually is for 3,000. Actually, quite expensive. We're going to buy orders 150,000. But these are the few indicators showing to us that we may have getting more antiviral that able to cope these COVID-19. Okay, so it's actually the positive signs showing that this is actually the beginning of the end game of the COVID-19. Okay, besides get people vaccinated, that's why you can see over here the death numbers actually getting lower. More people get vaccinated, you can see the death number getting lower and lower and lower. Okay, now, so beside these antivirals, okay, you can see the US, like the previous author, the New York Times, you can see the actual cases actually trending down. Okay, so it may be due to the effect of the third booster jab, that help to bring down the curve. Okay, and you can see the death cases, the death numbers in US. These are actually in US, so also trending down. So these are positive signs. Okay, and from the latest number of the COVID cases, okay, UK, of course, 34,000 has been hovering around these numbers. However, the death number in UK is about 100 to 200. Okay, so mainly are those not vaccinated. Okay, then you can see the English Premier League. Some of you watching football. No one wearing masks, and the whole stadium almost packed with people. So, and the one actually higher is actually US, but you can see Malaysia right now rank number 13 here. Okay, I think last month we actually ranked number 4, 5, and ranked number 5 at one time. Okay, everyone actually quite worried, but actually notice that because once you notice actually the patterns of the states, especially in more states actually have get the people actually vaccinated by roughly reaching fully vaccinated roughly about 60%. We start to see the cases actually trending down. Okay, I can see in the new Negeri Sembilan, Penang recently. I think KL, Selangor already trending down. Okay, it cannot go zero, but it's actually trending down. Okay, now recently, like today we have about 9,000, but you notice that actually the numbers actually mainly from if you divide it from this chart into two segments, so mainly come from the for those actually have not reached the fully vaccinated, about 60%. So come from the Sabah, the rest, the Kelantan numbers, Perak, Pahang. So, but for those first part, okay, first half here, you notice that actually, those actually cross over 60%. You notice that actually the cases actually trending down. So to me, Malaysia should be okay. Okay, on the way down already the cases. Okay, these actually individual states. You can see the vaccinations. Okay, the numbers. Now, if you look at the worldwide on the COVID-19, okay, Malaysia actually ranked over here. At one time, we actually rank over here. Okay, so we actually one of our key top in the world already. Okay, so I would say if you another 1 month time, in 1 month time we may be ranks for 70 80 70 80 the kids fully vaccinated, I think we'll reach about 80% over here, same maybe at same together with Singapore already. Okay, and you notice that the one actually struggling at one time, actually the top is actually US, but now it's actually ranked over here, actually US. A lot of countries will take US, because I think the key problem in US actually roughly about 20% of Americans that refuse to get vaccinated. So that's why when I say it's the beginning of the end game, does not mean the US will go down to zero. I would say that the number will go down. Okay, same like the UK, they start to live together with the COVID, and it appears that is actually quite effective to bring down the cases. Okay, now key point here is basically more country get vaccinated. Okay, now today we talk about global economy, and when you see this pattern, especially you can see Philippines, Vietnam, Thailand, all this the area, Indonesia, more countries actually get vaccinated, and then the opening actually open up, economy open up. So the surge in demand caused disruptions in the, you can see the disruption is actually in the supply chains. So besides that, you have these freight prices actually all-time high because of the processing of the cargo. So my view here is basically the inflation will remain high, and commodity prices actually will remain high. So we are in a situation where you see the inflation getting higher raw material price, and the demand, one by one, country start to open up, like Malaysia start to open up economies. So this actually, you can see the pattern. Okay, when the economies open up, surge in demand, more people go out and buy things, higher, So of course, the buy goods, of course, the sudden surge in products. So that's why you can see manufacturing, factories, the running, start to receive a lot of orders, So, but at the same time, you have that kind of transportation problem here and there because of the cargo, not fast enough to process all the cargos. So you have disruption here and there, raw material as well. So that's why cost the raw material price continue to go higher. So that's why the key point here is that the global economy today is that, and the country take times to get vaccinated, and when they take times to get vaccinated, and you can see more and more country actually open up the economy, so you can see the demand suddenly surge here, over here from this country, then surge in this country, surge in this country, then the commodity price will go higher. Okay, will go higher. That's why certain commodity actually reach the certain peak level and then bubbles, then burst. Okay, but some actually on the way up, like oil prices continue to go higher. So that's why inflations, even though the Fed says transitory, but he says that this transitory maybe extend a bit longer period. Okay, I agree with these statements. Okay, now look at the FOMC meetings. Okay, the recent one is actually on the September 21st and 22nd. Now, the recent table, okay, from the FOMC, you notice that actually the revised lower, okay, from June projections from 7% to 5.9% for US economy, and inflation the revised higher. So for those actually following my seminars, in some public seminars, I mentioned at the beginning of the year, I already says this inflation will be stay high for some period of time. Okay, sometimes people don't see it, as I say to you, that when country, one by one, the process of vaccinations and the cases start coming down. Okay, you can see the economies, the global economy recovery start to recover at a different pace in different countries. So, but it's actually slowing, getting better. Okay, including Malaysia as well. So that's why the inflation will stay high, as I said to you just now. Okay, because of higher commodity prices. Now, US June that time, the GDP actually quite good, but they're actually slowing down to 7%. Okay, the 5.9% from the 7% June projections. Okay, and the inflation actually revised higher to 4.2%. Okay, now look at their forecast, the GDP forecast. Okay, so it means that the upcoming years, the GDP actually will slow down. Okay, so that's why the Dow Jones, you can see China start to factor in, the stock market start factor in the slowdown in the economy. So you will see this later on in US stock market as well. Start to factor in the slowdown in US economy. Okay, when you don't have any stimulus package and you're talking about tapering, I mean you're going to slow down the bond buying process. So as a result, definitely, because the US economy going to recover, okay, slowly recover. So that's why you don't need any more stimulus. So as a result, the market will slow down, okay, and go back to normal levels. Okay. Unemployment rate also will come down. Okay. Then the inflation rates actually ultimately will come down. You start to see some commodities like iron ore, the crash in iron ore prices to low levels. You will see this later on, one by one commodity, when they reach the peak, almost all-time high, then you will crash. Okay, one by one. Okay, at the moment, some actually continue to surge higher, like CBO price continue to go higher. Now, this is actually the FOMC meeting, the recent one. Okay, so during the September meeting, you notice that this is actually the voting by the members, 18 of them, and you notice that almost half of them, one by one, 1, 2, 3, 4, 5, 6, 7, 8, 9, half of them here says that next year the Fed rates actually will be roughly ranging between 0.3 to 0.7, the range over here. Then all says higher rate. I mean, almost all say higher rates actually by 2023. But half of them says the Fed rate actually will go up next year. Okay, 2 point, some actually predicts actually 0.3, some actually predicts to be 0.7. Okay, my view here is actually in general, if you listen to the J Powell, okay, the Fed, basically they're looking at roughly about June middle of the year next year, the interest rate the Fed may increase interest rates. Okay, so take note of this. You have questions to all those quiz. Okay. Of course, half of them believe that actually will stay at 0.1, but half of them actually predict actually the interest rate will go up. So the Fed also the recent meeting they discussed. So roughly they also predict roughly about next year actually will increase interest rate already. Now you can see from here that the blue color is actually the projections of the September projections versus the June projections. All anticipated the higher inflation rates. Okay, as I said to you that the inflation rates will remain high. Okay, for some period of time, will not drop immediately. Okay, and upside risk actually is there. Okay, you can see upside higher risk because of the higher economic growth and then higher inflation rates. Okay, so upside risk actually is there. Now, how about the consensus of all the economists from Bloomberg? Okay, this is actually from Bloomberg. Okay, when the Fed will taper. Okay, since actually economy continue to grow higher, then they start to talk about tapering. If you look at the July minutes, okay, July minutes, during the minutes, actually the asset purchase on slowdown on asset purchase, we call it tapering. It's actually mentioned about 47 times. They talk about asset purchase. Okay, so basically you know that during the meeting, the key content, key topic they discuss is actually when they're actually going to slow down on asset purchase, which actually we call it tapering. So, and 67% says from this Bloomberg survey on all these economies, they say that half of, 2/3 of them more than half, they predict that going to happen in November. Okay, which I also mentioned at the beginning of the year. I say that will happen this year, will not happen, because at that time at the beginning of the year, a lot of people say actually next year only will taper. I say this year. Okay, likelihood this year. Okay, so I agree with them. I also belong to this group that predict actually November, either November or December. These two periods. Okay, and these analysts, they predict the interest rate actually will only go up actually in 2023. Okay, I believe I predict it's actually 2022, not 2023. Okay, next year will increase interest rate already rather than wait until 2023. Okay, now you can see from here the GDP growth actually all predicts this year will be quite high growth, then the growth rate will come down. Okay, inflation also, the unemployment rate also the same, then inflation later on also will come down to the normal levels, about roughly 2%. Okay, now look at the US, the latest inflation rates. Okay, now the Fed says the inflation is actually transitory. So in fact, if you think that it's actually up, then it will come down because of the base effect. About last year lockdown, April, June, then you discover that the inflation remained high. Okay, so again, my view is actually consistent with this. It's not. It may come down a bit, but it will not go back to the original this 1%. So they will stay high at high levels. Okay, so I don't think the US inflation rates will go down to 1-2%. Okay, will stay roughly maybe 3-4% levels. Okay, later on. Okay, but it remain high. Okay, so will be still higher than the comparable level of 2%. Okay, why? You can see from here why I say that. Okay, because of you can see the gasoline prices and the crude oil prices at the moment. You can see the momentum actually already coming to reaching $80. Okay, my view here is actually once more countries start to talk about open up borders, like I think the latest one is Singapore and South Korea don't have to quarantine. Then more and more country open up the borders, don't have to quarantine. So you see the Air Asia also increase the flights. So that's why my view here is actually the oil prices, when more country open up the borders, oil prices from the current levels, I would say it will go up at least another $10 up to maybe 90. Then plus a bit speculation may hit $100. However, plus please take note, there's some rumors here and there says that the Biden actually may want to release the US may want to release the strategic reserve, the oil reserves. So I'm not too sure. So that's basically whether true or not true, or when he will do it. But basically, Biden actually quite concerned about this inflation. That's why another reason why US want to talk to China. Okay, there are signs showing that they may remove some of the key products to lower down the tariff, because the American is actually the one that actually pay for the tariff. So as a result, to them, okay, so once actually remove the tariff, the prices actually roughly will come down, because this tariff, I think based on I read through somewhere, it's actually roughly about 19%. Okay, so as compared to US actually imposed, China imposed on US is about things less than 5%. So by US imposed on China products about the 20%, coming to 20%, but the American is actually the one actually pay for this higher tariff. So that's why they may in the process of negotiation and to remove all this some of the products. So that's why to me, next year you may see lower inflation rates, but at the moment the inflation rate will continue to go higher because of the gasoline prices, high oil prices, the disruption here and there. Plus another reason here is actually on China producer price index remain high. Okay, the reason why 9.5% actually quite high. Okay, one of the key reason, because you can see the China is actually the main manufacturing in the world. They actually produce a lot of products. Okay, so the key numbers to us is actually the producer price index. Okay, so when they are facing high prices because of high raw material prices, so of course, so they will charge higher prices. So basically, they will export all this high inflation to the whole world. So please take note, the prices will remain. I mean, some of the China products actually will be high, especially when this Christmas time, Christmas presents. I mean, during Christmas times, some of them already start to face higher prices. So that's why some people say, oh, you want to buy, you better buy right now, because otherwise, when it comes to during Christmas, the products that you want, maybe you need to pay higher prices. I'll say yes. Okay. So plus the recent disruption in the electric supply. So some states in China actually, they allow the electricity, the price to go up. So to me, I think some products, they will transfer the products, all these higher costs to the consumers into their prices. So that's why I think will stay high for some times. Okay. Now you look at the US bond yield surge to coming to 1.6%. So you can see the same patterns. Okay, this drop earlier is actually the delta. Okay, now with the high oil prices, so likelihood, my view here is actually will go higher. Okay, so with high inflation, how to invest? Okay, interest rate going to go up next year, so banking stocks actually will benefit. So if you want to position yourself, how to position yourself? Buy banking stocks. Okay, yeah, high interest rates, and Malaysia economy will recover. Banking sectors actually will do well. Okay, I predict Malaysia next year, not this year, next year, maybe second half next year, maybe, okay, or middle of next year, or second half, start to have higher interest rates already. Okay, once the US start to increase interest rates, and you can see some countries actually start to raise interest rates. Okay, now remember, if you're still not invested yet, so please invest. Okay, if you remember 2019, we talk about inverted yield curve, right? Already dropped, and now the inflation already go back to this level. So we are talking about high inflation levels from here onwards. Okay, so how to position yourself? So as I said to you, that economy recover, continue to go higher, then banking sector will go higher because high interest rates. So need to invest, okay? Economy recover. Because some people actually still continue to have worried about here, there. As I said to you at the beginning, we actually maybe at the beginning of the end game. I'm not saying that we immediately, the COVID-19 will disappear. No, COVID-19 will not disappear. Okay, just that the trending down, and then to the later part, you will notice that almost every country opened up the borders and then don't have to quarantine already. Then live together with the COVID already, and the dominant one, maybe the Delta. So the one research saying that nowadays, I mean yesterday's. So if this Delta will become likelihood to be the dominant one, you notice that the rest will not have much impact already. I mean, whether it's Mu, Lambda earlier on, we talk about all this, you notice that actually the Delta will be the dominant one. Okay. Now, the bond yield will go higher. So bond yield higher means what? But it means that the bond prices are actually coming down. Okay. So people actually sell bond. Okay. Because higher inflations. So that's why my view here is actually bond yield actually will go higher to maybe more than 2% for US 10-year treasury bonds. Now, how about the Nasdaq? Okay. So right now, of course, you ask me whether collection is over. I think not over yet. Okay, from now until third week of October or the fourth weeks of October, of course, we are going to have the third quarter results, and the third quarter results need to factor in the slowdown of the US economy because of the Delta. So these results, the third quarter results, may give you some earning surprises that the result may not be that good. Okay, so my view here is actually we cannot be too negative. Okay, just some possible corrections. about another 5-10% actually corrections actually possible. Okay, may not over yet. Okay, but once by end of this month, another roughly about 3 weeks times, so you will know roughly the end of the whole correction already. Okay, then after that market will go higher. Okay, tough one is actually next year. Why? When the WHO declared that the pandemic is over, that is actually the time the stock market will come down. Okay, okay, listen carefully. Okay, yes, when they say the pandemic is actually over, that is actually the period where the whole the stock market maybe at that time actually all-time high already, then market will start to slow down because market start to factor in the economic recovery already. Okay, so when they officially declared the pandemic is actually over, then normally at that time market already factor in all the positive news. Okay, likelihood next year. Okay, you can see why I highlighted the Nasdaq mainly because the high valuations. So at the moment the valuation is actually quite high. Okay, you can see from actually this actually June valuations. Okay, so in terms of the PE actually remain high. So that's why need to go through some corrections. You notice that actually when all these tech stocks announce their first quarter results, when they announce the result, actually the stock price drop. Same thing when they announce the second quarter result, actually the stock price drop because of the some actually factor into the stock. The good news already factored in the stock prices already. And key part here is basically US, when they have during the summertime, you notice that the share prices of the Walmart are getting higher. A lot of the physical shop business is getting better. It means that people may buy less online. They may buy directly from the shops. Okay, but don't get me wrong. This trend will be forever. Just that people actually like Malaysia, we buy Lazada, Shopee, right? Same thing in US, they'll buy from Amazon. This trend will be, even pandemic over, they'll still continue to buy online. Just that, some profits, sales will be affected because some people may go up and buy things rather than buy through Amazon. So that's why the stock prices need to factor in this factor as well. Okay. In fact, they actually perform quite well. Okay. Over, you notice that this year alone. Dow Jones also the same. They will go through some corrections. I think it's not over yet. You notice that actually the trend actually on the way down, still on downward trend. So I think they were holding quite well above 260 days moving average, roughly about 3,002. I would say like above 30,000. Okay, just that these third quarter results when they announced during the third week and fourth week of October, we prepared some high volatilities, especially to factor in the changes in the fundamental, especially the slowdown in US economy during the third quarter. Okay, now as I mentioned to you, one by one the commodity hit the peak, then after it plunged. Okay, one of them is actually iron ore. You can see plunged almost 50%, actually gone 50% gone. Okay, my view here is actually if you look at the overall, like later on here, okay, the stock market, when we talk about global stock market right now, okay, to me I divided into three main parts. Okay, one is actually one leading is actually China. They're not affected by the COVID, so they're actually leading. And you notice that actually the stock market actually trending now, going through some correction. Tech stock actually, if you use some of the ETF like KWEB, actually dropped by 50% with the US, those China tech stocks. So, and China during March this year, Li Keqiang mentioned that the China GDP growth actually growing at 6%. At that time, a lot the economy says that you notice that Bloomberg, CNBC, they say, oh, China this year should be growing more than 8%. But you notice that, hey, recently the numbers slowing down. So because China, January already, the central bank already warned you already, I think the 22nd of the January, the China central bank already warned you, all of us, that they are facing asset bubbles. And you notice that they increased tax actually, the property tax rates actually in May. So they're doing all this to curb the asset bubbles. So to me, my view is actually the same. I always mention to people, I say, when people say you have a problem, then you say, yes, I have a problem. Then I'm trying my best to solve the problem. To me, it's not a problem. So you can see, China, beginning of the year already, go after property, go after the tech sectors, going all this. They scared about bubble, and then Bitcoin as well. They remove all because of course, not only this reason because of bubble, and another reason because actually, the fulfill high power consumption, high CO2 emissions. So that's why they remove all this, and then the property price also going through some correction right now. You look at a lot of property stocks, actually the stock price plunged to low level, like Evergrande, all this one by one. So to me, you will see China property stock prices. I mean the China property prices will come down. Okay, so the leading factors will be all this go after all these properties listed companies. So my view here is actually is good. They are doing, this is where all over years, all the foreign analysts, fund managers, they're all criticizing China, say that China not doing enough to curb all these property bubbles. So China actually doing their best. However, sometimes all these property developers refuse to listen to them. So they continue to gear to high levels. So of course, given that kind of this opportunity, they're growing at high levels, and that's why take the opportunity to clean up all these the bubbles. Okay, my view, if you ask me, big concern, I don't think so. Okay, it's within their control period level. So I think you look at the stock prices, actually some actually may gone through some correction already, and some sell at probably at low prices, so throw out everything. So it's good. Okay, some convert the debts actually into equity. Okay, merger, some sell shares, some actually sell out disposal, to lower down the gearing. So to me, this actually, as I said earlier, when people say you have a problem, then you say, yes, I have a problem. I'm doing my best to solve my problem. To me, that is not a problem. The key problem here is actually when people say you have a problem, then you say you don't have a problem. That is actually the key problem. So just like, like 1997, when every country's, all analysts say the Malaysia economy overheating, then at that time, our leader says, no, we don't have problem. So our economy don't facing any overheating. That's why when people say you have a problem, then you say you don't have a problem, then there's a problem. That's why you have financial crisis. Then in 2008, subprime loan, okay, a lot of people actually criticizing on subprime loan. Then Alan Greenspan says, oh, I don't have problem. So when people say you have problem, then you say you don't have problem. In the end, you have financial crisis. So China fully aware of these asset bubbles. So beginning of the year, January, already doing all this to curb it. Same as the recent, all this on the disruption electricity supply. Okay, my view here is because when the Southeast Asia, they actually facing COVID and disruption, including Malaysia, Vietnam, Indonesia, Thailand, Philippines, all these. So running at a lower capacity. So the order are going to China. So China manufacturing, they're growing at a higher speed. They're doing very well. That's why you see the number actually doing very well for start of the year. So that's why China worry that some of them actually too excited. Then they will expand the capacity. Then later on, when more and more economies open up, then you see the drop in actually your orders. So whatever that you receive the first half of the year this year may not be sustainable. So that's why they curb them. They want them to shut down earlier before the third quarter, the end of the quarters, because they need to fulfill the target on some of the criteria to monitoring on the CO2 emissions. So that's why some actually close down factory to slow down the supply. Okay. Now, to me, China is actually the leading. Okay, 4 to 6 months ahead, you can see China's economy slowing down, and the one at the peak is actually the US. Okay, over here. Okay, that's why China, US actually start to feel the bit of slowdown, and China already going through the correction already. Okay, as economy slowing down, everything slowing down. So some of stock prices, tech stocks actually drop to low levels. To me, some actually quite attractive at these levels. You can slowly nibbling. The key issue here is actually we don't know when actually the bottom. Okay, that's the key questions. Now, then Malaysia, where's Malaysia? Malaysia is over here. We actually will continue to go higher. Okay, you can see more open up. Everything's every day. You can see restaurants start to open up. So we are lacking the US. We are actually like US in May, June. If you remember May, June during that time, wah, semua orang pergi ke sini, ke sana, makan here, makan sana. Okay, so sightseeing, wow, travel, right? Let's bring summertime, May, June, July. So we are actually going to have this good time. Then you remember the stock market getting higher, higher, higher. Yes. So how to invest? To me, very simple. Either you buy Malaysia. Malaysia, you must invest. Okay. Be careful of US because they actually start to face same like China, slow down. Okay. However, for China, okay, I'm not too sure when actually the bottom. To me, at this level, okay, some of the tech stock actually looks quite attractive. I don't think will drop to very low. It's already dropped by 50% already. Actually, dropped by 50%, already quite a lot already. Okay. Now, let's not talk about from iron ore here. So, why I mentioned to you here because part of it because actually on the slowdown or the demand or properties sectors actually in China, all this some of the commodity prices metal actually like iron ore drop to low levels. Okay, people start to worry, wow, the demand of the iron, okay, iron ore already. Then, however, our palm oil will continue to go higher. So you ask me over already. I don't think, maybe not yet. Okay, I'm not too sure when will be the peak, but it appear to be. So take note of these third quarter plantation stocks. They're going to announce good results. Okay. Then, as I mentioned to you, the Baltic Dry Index, you can see over here. So you must understand, then the ship, they go to transport all this cargo to one place. Then from one place, actually go back. It cannot be empty, right? So, but you have disruption here and there. So wait over here, then some actually port because of the disruption because of the COVID, all this Delta in US as well. So then lack of workers, all this. That's why you can see, the price will remain high. Okay, you ask me over already. I don't think so. I think until all these are, even though it's short term, but I think they may go higher. Okay, no sign showing that actually the trade actually the problem actually solved already. Okay, now so next one is talk about the global economies. You can see from here the slowdown in US in global economy. The upcoming October updates are actually by next week. Okay, so you can see from here all slow down next year. So the market need to factor in for slowdown. But to me, you start to see it happen in China already, and US later on will follow up. Malaysia, to me, we enjoy our rally first. Okay, I will say from now until beginning of the year, during Chinese New Year, normally every year actually about almost the same. October until beginning of the year, normally market will be good for 3 months. So you make sure you make enough money. Normally market will be up for 6 months, and you have a 6-month consolidation period from March, April. Then you have consolidation until roughly September. So you only invest 6 months, then another 6 months you can go holiday. Market will come down, going through some corrections. Okay, so this is actually the time. Okay, you attend the seminar at the right time. This is actually the time. Okay, now you can see the US economy. This with the recent surge in actually jobless claim. Okay, last few weeks, I think the job data they're going to announce on tonight, I think will not be very good. Maybe higher than these numbers, but maybe remain low. Will not be like these numbers anymore. Okay, given the kind of higher claim. Of course, yesterday, claim actually dropped. Okay, but overall, actually, the trend actually downward trend. Then the next one is actually on the unemployment rates. Okay, the rates actually, will continue to trend lower. Right now it's actually 5.2%. Okay, so one question here is actually the bond rate is going to go up. So what best strategy to invest right now? So best strategy, of course, need to buy equity stocks, buy commodities. So with the high inflation, the best is actually buy commodities, buy equities. Actually, that's why I said to you, your plantation shares actually will move out. Okay, so some of penny but plantation stocks actually start moving a bit really. Okay, will go higher. Okay, with that kind of high CPO prices. Okay, then the US annual GDP growth, you will see some slowdown already. This actually the higher is because of the base effect. Okay. Then the US dollars, okay, because of the tapering soon, okay, then of course the US dollar was strengthening, okay, further and further. So of course versus ringgit will feel some pressure, but I don't think ringgit will drop to low levels because we'll benefit from higher oil prices. So net off roughly about 4.1, 4.2 levels, okay. Then the consumer sentiment recently dropped because of the COVID, okay, the Delta, okay, but with some recovery. The US also facing some slowdown in sales year-to-year growth. Same pattern like China, start to slow. That's why third quarter results take note, may factor in the stock prices, the slowdown, the drop in actually the growth rate in some of the US companies. PMI also showing some slowdowns. Okay. Industrial production also slowing down in US, so that's why be careful on the third quarter results. But however, some actually may factor in stock prices already because already dropped. Okay, we cannot be too negative. They are still growing, it's just growing at a slower rate. How about China? As I mentioned to you, they already anticipate this going to happen, so that's why they're doing all this at the same time to curb the asset bubble. They're quite worried. Okay, on the asset bubbles. So I'll say the third quarter results actually will show some slowdown. You can see the recent number, the PMI numbers on downward trends. Okay, the manufacturing orders, the on downward trend, and the trade growing actually also slowing down. The trade growth. Okay, the industrial productions. You can see from here the industrial production slowing down. Okay, at one time year-to-year growth only 5% only, slowing down already. Okay, and you can see from the China retail sales also slowing down, 2% year-to-year growth. So but you say that then this year actually were very low. They can. That's why I said to you that at the beginning of the year, the Li Keqiang says that 6% growth, 保六. So I would say they were roughly about going around 6. A lot of economists predict roughly about 6-7%, 7% levels, plus minus. Then inflation actually remain low in China. Now, how about renminbi? I will say later on, once actually US dollar strengthening further, then of course renminbi actually may go down to 6.6, 6.7. Okay, almost all currency actually will drop against US dollars. Okay, when they slow down on the tapering. I mean the start to buy back bond, slow down the buyback bond. So of course the US dollars actually will strengthen further already. Then you can see the Shanghai index actually going through some corrections. Okay, already going through some of the tech stocks actually, in fact, actually dropped a lot. How about Malaysia? Okay, now last part actually on Malaysia. Malaysia to me, this is actually all extracted out from Ben Negara's slides. Okay, I just highlight to you. Okay, my view here is actually these are all history already. So of course, second quarter numbers or the third quarter numbers definitely will not be good. Okay, so second quarter starts to show some slowdown already. Okay, but I think it's because we are not fully locked down, so that's why the demand is actually there. Plus the external factors, the export remain good. So I think Malaysia should be okay. Okay, and so you can see the second quarters. Okay, this is actually second quarter. Third quarter, I think the numbers will not be good for some. Okay, so second quarter actually quite at that time, during that time, it's actually quite okay. But we have start to have a lockdown in the third quarter, so numbers will not be good. Okay, for third quarters. Okay, but private investment for second quarter consumption export continue doing quite well, 31% growth, quite impressive. So this one will pull up the overall economies. So that's why growing GDP growth from 3 to 4%. So 3 to 4% for this year. I also agree roughly this range. Okay, but fourth quarter numbers will be very good. Okay, we start to see more activities than restaurants, more people, business is growing, export continue to recover. So fourth quarter will pull Malaysia economy up. Okay, that's why remember, need to invest. Okay, stock prices remain low. So take note of this. Okay, and our COVID cases continue to come down. Okay, and some people say, because this may not be true, because actually not reported, whatever, but you can see hospitalization, ICU also not trending down. So this is actually true numbers. So to me, trending down already. Okay, cannot be zero, but on the way down. Okay, and crude oil price I mentioned to you will roughly $80, the $80-90. Okay, may go up to 100. I mentioned earlier already. This Malaysia industrial production is going down for the August-September number will remain low. Okay, then PMI numbers don't start to recover a bit. Okay, manufacturing orders, but I think the next one will remain low. May not be fully up to 50%. Okay, 50 levels. Then Malaysian ringgit, as I said to you earlier, we are actually roughly about 4.1, 4.2 levels. We'll benefit from higher oil prices. And bond yield up, same as the US bond yield. Basically, in general, higher inflations, the bond prices should come down. The bond yield will jump up higher. Then, as I said earlier, Malaysia likelihood this interest rate meeting, MPC meeting, will not have any interest rate changes. But next year likelihood, maybe middle or second half, will have higher interest rates. So that's why position yourself in the banking stocks will benefit from high interest rates. Okay. Then inflation remain low. That's why likelihood will not have actually higher interest rates actually in the first half of the year possible. Okay, will depends on the recovery. So hitting here is actually the inflation will be about 2 to 3%. Okay. Next year, this year inflation rates. Okay, so remain low. Then how about stock market outlooks? Okay, stock market outlook, as I said to you, Spanish flu. Okay, this one mentioned to you already, 3 wave. Okay, remember this, that when the WHO actually declared the pandemic is over, the stock market actually come down for a while. Then after that, will go up very strong. Okay, will go up all the way up. So remember, will come down first. So that's why next year, especially March, April, then that kind of correction actually will be worldwide also will going through some corrections. But beginning part during January, February, March, I think may be good. But after that, when the pandemic officially declared over, likelihood, okay, market will come down. Then after that, the market will be solid growth until 9-10 years to 1920, from 1920 to 1929. This is actually based on the Spanish flu. Okay, this may happen in worldwide economy as well, in US economy as well. Okay, and actually, in fact, the Spanish flu actually jumped by about 500% within that 10 years. Every year about 10%, 50%. Then how about Malaysia's last 2 slides here? The KLCI, I would say you can see from here the patterns here is actually going to go up higher. Okay, my view here is actually if you look at the worst may be over, then with the change of the I would say basically the whole political event is actually PH change to PN. Now it's actually from PN change to BN, and you can see a lot of people say, wow, UMNO is coming back, then stock market activity getting higher and the foreign funds are coming in. Hey, you can see the inflow of foreign funds. So remember, my view here is actually will go higher from now onward. So we are still at early stage. A lot of blue chip shares still selling at cheap level, so you must buy. And as I said to you, we'll go higher until next year Chinese New Year. So don't miss this opportunity. And penny stock may move. Okay, penny stocks. A lot of penny stocks is selling at quite cheap levels. Okay. So with this, I end my presentation. Thank you very much. Pass back to